I'm here today with Ashley Arrowsmith from Mortgage Choice to talk all things home loans and growing families. Thanks for joining me, Ashley, here at the park.
Thanks, Kate. There's a lot to talk about today, and I'm happy to help.
Tell me, what is the benefit for a family to use a mortgage broker?
So using a mortgage broker, we can compare thousands of loan options amongst our panel of lenders. We have over 35 lenders on our panel, and we can ensure that we find the right loan option to suit you and your family and your financial goals.
When considering a family's borrowing capacity, what's taken into account?
So the bank's looking at your income, but they're also looking at your expenses and your liabilities. Things like credit cards, car loans, but also the number of children you have also comes into the equation.
If a family has maybe, say, a mum and she's self-employed, she's got a bit of a side hustle going on, is it possible for her to still get a home loan?
Depending on the income that's being generated, but definitely. The bank still considers income from side hustles. It needs to be evidenced on your tax return, so it's a little bit different than providing pay slips, but the bank will definitely consider that as part of your borrowing capacity.
So then what would the process be like for, say, a self-employed person who's wanting to get a home loan?
So the main difference is the way the bank assesses your income. So your income will be derived from your tax return as opposed to a pay slip. And as a mortgage broker, we can assist you in guiding through which documents are required to provide to the bank for a loan application.
So then I guess again, it brings us back to the benefit of using a mortgage broker like yourself, because you're aware of all the options out there, right?
Correct. Our panel of lenders all have different loan options, so we can generally select the loan option that's going to suit your family and the financial goals.
Ashley, can you tell me the difference between a fixed rate loan and a variable loan?
A variable rate loan will move with RBA announcements. So if the cash rate is moving upward or downward, then your variable rate loan will move accordingly. If it's a fixed rate loan, it'll be a fixed rate for a particular term, say 2 or 3 years. A fixed rate can be great for families when they're looking to budget because they know what their repayments will be for a certain period of time.
Why should a family use a mortgage broker instead of just going to their bank and finding a loan themselves?
You could go direct to the bank, but if you do, you're generally restricted to that bank's products, which may be only 1 or 2 loan options. By partnering with a mortgage broker, we can compare loans amongst our panel of 35 lenders with thousands of different loan options to suit your needs.
Ashley, isn't it expensive to use a mortgage broker?
Not at all, Kate. We're paid by the bank or the lender when your loan settles. If there are any fees applicable, you'll know up front, so there's no surprises.
So Ashley, it sounds like a mortgage broker is a pretty great person to have on your team if you're a family looking at your finances.
For sure. We're in your corner the whole way through the application process. We can negotiate with the bank and find the right option for you and your family.
All right, families, you heard it here first. Whether you're searching for a home loan or childcare, comparing your options will save you time, money, and avoid surprises. For more information, head to careforkids.com.au/mortgage choice.